This is not investment advice. The only purpose of this video is to bring 5 BioPharma stocks to your attention because they are trading at or near 52-week lows. For those investors that believe stocks like these may 5th trade in cycles, we recommend you research these 5 for yourself. Remember, these are BioPharma stocks subject to considerable regulation. You could lose your entire investment buying stocks like these. First up is Vera Therapeutics. For all 5 we provide a graph and an overview of market cap versus enterprise value on the top right. By way of background, Vera's etacicept is a once-a-week therapy dosed via traditional syringe injection in a registrational trial for chronic kidney disease anticipated to read this summer. If the trial is successful, regulatory submissions are to follow. Vera is off almost 50% from its November peak, falling 20% on Friday, February 14, 2025 on news that rival candidate sibeprenlimab from Otsuka may be available in the quote-unquote months ahead. Otsuka's rival kidney therapy is dosed monthly, where again Vera is dosed weekly and hence perhaps perceived as less convenient. Supposedly Goldman Sachs reaffirmed a buy rating on Vera after Friday's sell-off. A Wells Fargo analyst said the sell-off in Vera quote-unquote makes no sense. We do not know Vera well enough to comment. For the record, we have never made money trading call or put options, so we strongly discourage the practice. Nonetheless, some may think it interesting. An investor purchased considerable blocks of June 2025 call options on Vera at $40 and $60. By our math, over $500,000 worth were purchased in one trade. That's a big number. Finally, like all 5 we will review in this video, there is potentially much more on Vera. We're only sharing one perspective. Ionis historically operated in partnerships where roughly half their roughly $800 million in annual sales came from R&D related revenues. Just before Christmas, the FDA approved Ionis' first wholly owned product called Tryngolza for FCS. While Tryngolza's revenue opportunity in FCS is not considered meaningful at less than $500 million a year, a phase 3 read due later in 2025 and Sjogren's would supposedly increase Tryngolza's opportunity roughly 5-fold. Ionis also has an August PDUFA date for its olezarsen candidate for that is expected to do roughly half or $750 million per year per Needham and William Blair. By any standard, Collegium is an old school and boring company focusing on pain management. However, revenues have meaningfully grown the last few years as Collegium has scaled. Here are revenues by year. Last month Collegium guided investors to anticipate sales of $750 million per year and EBITDA of up to $450 million. From an old school price to earnings perspective, Collegium is expected to deliver over $6 in EPS the next 2 years. At $30 a share, Collegium does not trade for a PE ratio of more than 5 in 25. Though analysts do not foresee significant revenue growth after, Collegium can continue to scale via additional acquisitions, or sell to a bigger company. Agios is a commercial stage focused biopharma with a therapy called Pyrukynd that is FDA approved, a rare disorder that affects red blood cells. Pyrukynd sales are running at $40 million per year, but a September 7, 2025 PDUFA could expand its label. Pyrukynd is also being studied in sickle cell disease with a phase 3 read expected in late 2025. Analysts expect Pyrukynd, if approved for all 3 indications, could do $1 billion a year at peak. Exercise caution as there's been considerable history at Agios. For example, they sold their oncology portfolio years ago and have racked in billions. Some may find it disappointing Agios' enterprise value is not $500 million today. Like all 5 presented here, do your own research. Iovance's Amtagvi was approved last February 2024 as a second-line advanced melanoma therapy. We had to include Iovance even with Repligen's upcoming PDUFA date for its RP1 candidate in the same indication. Unfortunately, there are enough patients for both therapies to succeed. Outside of releasing an updated investor presentation in January 2025, Iovance has been relatively quiet. This is not investment advice, but we suspect Iovance's Q4 earnings release and conference call next Monday, February 24 could be an inflection point. With an enterprise value of $1.3 billion, IOVA does not trade at 3x its 2025 guidance that only includes U.S. revenues. Furthermore, a data read in certain lung cancer patients later this year could be a significant inflection point as these patients have very few options. We'd remind investors that in mid-2023, well before Amtagvi's approval, a major existing shareholder added significantly more shares for roughly the same price Iovance trades for today. Again folks, none of this has been investment advice. We have no idea how these stocks will trade in the future. Please take a moment to like this video and follow us on social media. Thank you.